So how do you use bullish candlestick patterns to profit in the stock market? So in this video, we'll be looking at bullish, candlestick patterns. What are some of the key patterns that you want to look out for? And the key here is that where do you want to look out for such patterns, right? It's not just like anywhere in the chart or anywhere in the prices, but where exactly do you want to look out for such patterns such that you increase your odds of winning tremendously. Alright, hey guys, Joey here, top tier Myzel, trader in Phillips Securities. So this is the video right here to talk about bullish candlestick patterns, right? So before we talk about like bullish or maybe even bearish and all that, let's just understand what is candlestick. So most of the time people will use what we call candlestick. We will see like green bars and red bars, like what you see over here in the chart, because it's very visual, it's very easy to understand. So let me just explain very quickly for those of you who are new to candlestick. So when we have a green bar right here on the left, right? So let me just explain to you. Let's just talk about this green bar right here. So when the bar is green in color, it just means one thing, right? It just means it opens lower. That means it opens here. Okay, so let me just draw it for you. So this is kind of like the opening price, and this is kind of like the closing price, right? So it opens lower and it closes higher. That's it, right? There's a difference between a green bar and a red bar. So on the right, we have what we call the red bar, right? Red bar right here. So why is it red in color this time? So, well, it's red because it kind of like opens, all right? It opens higher and it closes lower. Right, so every single day, I mean, depending on the time frame you're using, let's just talk about a daily charts right here. Every single day, there'll be what we call an opening price, a closing price, a day high, and a day low. We have these 4 data points. It's a fact. You can't change it every day. The market goes or stock goes like that. There's an opening, there's a close, and it's high, and there's low. Sometimes it might be the same. The opening and closing might be the same, but we do have an opening and a closing price. All right, if there is trading in that specific stock. Right, so a green bar just means open low, close high. A red bar just means it opens high and close low. All right, so the next question will be, which is more bullish? Which is more bullish? Is it the green bar or is it the red bar? What do you think? All right. Well, I would say it would be the green bar, right? Not that it's just more bullish or very, very bullish, but just because it opens lower and close higher, all right, and the bar being green in color, it is definitely more bullish, right, than that red bar, because the red bar is red in color, it opens higher and close lower. That means for the red bar, opens higher. So buyers are pretty much in control in the morning and the early part of the day, but towards the end of the day, towards the closing time, sellers came back and pushed it down, and it closes lower right over at the bottom. So that's why for the red bar, it is bearish. You probably want to look for green bars, right? Green bars in terms of it being more bullish than the red bar. So that is just an example, basically an understanding on what is this bullish, all right, bullish candlestick bar and a bearish candlestick bar, which is the red one. All right, but what are, so this is just an explanation, very, very brief, very simple, but what about some of those like patterns that we can look out for that are more bullish? All right, before I talk about that, let's take a look at one more thing in terms of these 2 bars right here. So I think you understand, we think the colors, right? The colors red and green, right? But let's go on to talk about the black line. So I'm not too sure whether you can see, but there is this black line right here at the bottom and at the top, right? So this is like black vertical line down, black vertical line going up. What are those lines? Well, that is what we call the shadows of the candle. So as I mentioned, right, every single day there'll be an opening, a closing, a day high, and a day low. So that black vertical line pretty much at the bottom signifies the low of the day. That means this right over here is the low of the day, and right at the top here, this is the high of the day. All right, same thing, right? For the red one, right, you have a day high, day low, and that's where you get this candlestick bar. Right, so what would be the most bullish candlestick pattern to that you can look out for? So I would say that you want to look at a candlestick bar that not only is green or red in color, but one that has a long lower shadow. Let me just draw it for you right now. So for example, we have this bar, a green bar right here that is green in color. That means it opens low and close higher. So we have this like same thing, the shadow, one at the top, one at the bottom, pretty much the low and the high of day. And then we have another green bar, right? Another green bar that goes like that. Same thing, right? It opens low and close high, right? The same, right? Maybe even the same price. So in terms of the length of this green bar, it is pretty much the same as the one on the left, right? So both are green, both are great, but what happens is that the right one, the right bar right here, all right, same thing is the same. Okay, let me just remove this. So here's the same upper shadow, the same height, but the lower shadow, look at this right here, the lower shadow, it's much longer. So the question is, which do you think is more bullish, right? So both of them have the same green bar, the same height, or you can see right here is the same, all right, it's like the same right here, okay, but one has a much longer lower shadow. The one on the right has a much longer lower shadow. Which do you think is more bullish? Number one or number two? What do you think? All right, so the answer is number two. So even though both of them have the same like opening price and closing price, the green bar is the same height, but because, right, for number two, all right, how you can tell it's more bullish, it's very simple. So one with a long lower shadow is this. That means, right, both of them opened right here, right? So this is the same opening price, no difference, right? Opening price, and both of them close, same thing, right? They both open and close at the same price. There's no difference. But what happens is that for number two, right? For this number two, it opens, right? So for number one, okay, let's talk about number one first, right? Sorry. So for number one, it kind of like opens, it went down a little bit, it went down, you know, sellers push it back down, and buyers came and kind of like push it back up all the way until you close somewhere at the top. So that's for number one. But for number two, in terms of this bar right here, you can see same thing, it opens and it actually pushed lower, all right? It actually pushed lower in the day, right? Push lower, it pushed lower, it pushed lower, all right, in a day. All right, so when you look at it, and maybe at 11 a.m. or when the market opened in the morning, it was actually red in color. It was pretty much maybe even like this red bar right here, because, you know, it actually opened, and you know, when you look at it, it could be at a lower price. So it could, at the point in time, it was lower, and it could be a red bar in the morning. All right, so that is what is happening, right, in the morning, in the middle of the day, or somewhere in the middle of the day, right, whereby it opens and it went lower. It could be a red bar, right? But somehow, somewhere at the end of the day, what happens is that as it goes lower and lower and lower, buyers came back, right? Buyers came back and push it all the way up, right, all the way up until it closes right here, all right, right at this level, pretty much this point right here. All right, so that just shows that a bar with a long lower shadow is more bullish, because, you know, sellers are pretty much in control in the middle of the day or in the morning. You know, it pushes prices all the way down. It looks like a red bar. It looks like it's really scary. It looks like really bearish. You could like just, you know, tank all the way down. But what happens? Buyers came back somehow and push it all the way back up, right? All the way back up. So let me just remove this and, you know, get rid of all this red bar and push it all the way back up until it closes right here, right at the top. So even though it closed at the same level as the first bar, right, both of them open and close at the same price, but just because number two, all right, we have a long lower shadow, it just looks a little bit more bullish, because the buyers actually came back at the somewhere at the end of the day, right, and the price higher and higher and higher. From a red bar, it became green, and it closes at the top, right? So that is a sign of strength. So this is what we call a bullish candlestick bar. So, you know, there are many names for different kind of patterns. We have the bullish piercing pattern, the bullish engulfing, the hammer, and all that. But essentially what you want to do is you want to focus on the concept behind, the thought process behind each candlestick bar, so that you don't have to memorize like 10 or 20 names, right? So in this case, just by looking at a long lower shadow, I would say that that is something that is definitely more bullish, right, compared to the same bar with the same opening and the same closing price, right? So that would be a long lower shadow. So another one would be what we call a hammer. I mean, just another bar that I like as well. Let me just go ahead to zoom it for you right here. I think that would be what we call a hammer. So a hammer just means it's something like that. So we have this like green bar that goes like this, all right, and kind of like opens and closes, and we have this like long lower shadow as well right over here. So in this case, this is what we call a hammer. That means it opens low and close higher, but you can see same thing, the high of the day. So there is no upper shadow at the top, all right, so that you don't see any black vertical line at the top, right, because it closes at the day high. So that's a sign of strength. So in terms of like comparing this and this, right? So number 2 and maybe number 3, right? So let's just say this is number 3, right? So number 2 and number 3, assuming the length of the green bar is the same, the opening price and closing price is the same, all right? Which do you think is more bullish? Is it number 2 or is it number 3? Assuming that the long lower shadow is the same as well, right? In terms of the length is the same as well. Which do you think is more bullish, number 2 or number 3? Well, I would say that it would be number 3, right? Number 3. Why? Because there is no upper shadow as well. For number 3, you can see it just closes at the day high. That means, in the morning, sellers came and pushed it down, but buyers came back, take it all the way back, up right here, and it closes at the day high. It closes at the day high. Sellers didn't even have a chance to just push it down a little bit. There's no upper shadow. It pretty much closed at the day high. So that is a sign of strength. This is what we call a hammer. This is what we call a hammer. Let me just write the name here. Alright, so you don't have to memorize the name, as I say, right? You just want to understand the concept behind. Alright, in this case, because there's just no upper shadow at the top, that means it closes at the day high. It is more bullish than one with assuming the same closing, same opening price, the same length of lower shadow, assuming the same number 2 and 3. Then number 2, because it has a upper shadow, it is a little bit less bullish. Not saying it's not bullish, it's just less bullish than one without an upper shadow. Does it make sense? Right. So these are pretty much just some bullish candlestick patterns that you can look out for. But the key is, where do you want to spot them? Right? You don't want to spot them anywhere in the place. You want to spot them in the right areas, what we call areas of value in the chart, right? So this is what we're going to talk about right now. So this is, we try to see if we can find number 2 and number 3 in the hammer. All right, we can find that in what we call the areas of value. Right. So let's take a look at some case studies right now. So firstly, when you're thinking about buying a stock, right, whether is it like a bullish candlestick bar or bearish candlestick bar, first of all, the stock would be good if it is in an uptrend. So we want to try to buy stocks which are in an uptrend. There's a potential for it to hit higher rather than a downtrending stock that's just going lower and lower and lower. And if you buy, you get stuck, all right, and that's where you are just putting your money there and locked up forever, all right? So you don't want to do that. You want to try to think about buying stocks which are in an uptrend, right? So, and that's where in an uptrend you look for that bullish candlestick patterns that we just talked about, right? You don't want to look for it in a downtrend, because even in a downtrend you see bars like that, it could just push up a little bit and it might just go down and down, and the downtrend continues. Does it make sense? All right, so let's talk about an uptrending stock. So in this case, we have a stock right here that has been my watch list over the past few months called Sembcorp Marine, one of those pretty strong uptrending stocks over the past 1 over a year. All right, and what I mean by uptrending, so I'll not talk too much about the trend and all that. We'll keep that for another video. In this case, we try to find some of those bullish candlestick bars or patterns, right? But very briefly, you can see that it is an uptrend because it pretty much forms what we call higher lows, right? Higher lows, as it pushes up, it goes higher, higher lows, as it kind of like moves up, it forms higher lows. So that's a sign of strength just by forming higher lows. And in terms of the moving averages as well, right? So we have this red and the blue line. This is what we call the moving average. You can see that the red line is the 100 days moving average. The blue line is the 200 days moving average. So both of these lines are obviously still pointing up. So the mid to long-term trend of this stock still looks quite okay. And these are stocks like this. I mean, this could be just one stock, but it could be any other stock. If you're seeing this in your own stocks, that's a good thing. That's where the trend is up in the mid to long term. You can think about buying or maybe even holding on to the stocks that you have already bought previously. Does it make sense? All right. Just by looking at the moving average. And the next thing is this, right? Just by looking at this, what we call a crossover. So the red line 100 days moving average is above the blue line. So all this what you can see since last year has been above it, but in order to be above it, you need to cross above it, right? So that's where you can see that when the red line 100 days moving average cross above the blue line, that is where we are seeing an uptrend starting to form. And since then, it's just been moving up and up and up. All right, so we are in an uptrend. That's where we want to think about buying, right? So let's just go on to look at where do we want to find this bullish candlestick bars to time our entry to buy, right? So first thing first, we're going to go ahead to draw what we call horizontal price levels, right? What we call horizontal support and resistance level. Let me just draw it for you before I explain to you. So very quickly, this will be another support line. It will be another resistance line. So let me just put this green in color. So a support level is one whereby it touches, it rebounds up. All right, that's a support. And a resistance would be one whereby it touches, it comes back down many times. That's like a resistance level. So in this case right here, I think I've just pretty much drawn what we call the horizontal support and resistance line. So in an uptrend, right, we want to try to think about buying in an uptrend near what we call that support level. So let's just zoom back, like for example, just like last year, for example, let's say we are right over here, right? This is an uptrend. You can see the red above the blue line. We can try to think about getting in near the support level right here. So that is kind of like what we call the area of value, right? Area of value are pretty much zones whereby, you see any bullish candlestick bars, any bullish candlestick patterns that I just talked about just now happening in these areas of value, you have a very high chance of upside or rebound, or making profits just by getting in this area of value, plus seeing that bullish candlestick bar in that specific zone, right? So you don't want to just look at the bullish candlestick bar like the hammer that I talk about, or the one with a long lower shadow, just floating around somewhere in the middle of nowhere. No, right? You want to try to spot it, what we call near that area of value, that zone, right? And where would that zone be? Well, it would be near a support level, or horizontal support level, whereby prices have kind of like touched it a few times, it rebounds from it, it's an uptrend. We want to try to spot that bullish candlestick bar or pattern in this zone. So for example, let's say we have spotted that hammer right around here, or one whereby there's a long lower shadow. In this case, look at this, right? So this is not a hammer, but I would say this is something like a bullish engulfing. It comes like opens low and close high, completely engulfing the previous day bar. You can see it started to push up. So this is quite a good bullish candle. All right, there isn't any hammer. It could be a doji as well. So a doji would be one whereby, okay, let me just put in black in color. So a doji, just now I don't talk about it, but let me just cover very quickly. A doji would be one like this, right? Something like a cross, right? So there's no green or there's no red bar, all right? Why? Because it opens and closes at the same price, right? So it's like a cross, it's a black line, and it's an upper shadow and a lower shadow, right? So if we see like a long lower shadow, that is a good thing as well, especially if it happens right in this area of value, all right? So a doji, like what is this thing right here? It's like a little cross. It can signify a reversal or indecision between buyers and sellers. So if you see it right at the area of value, this little doji or like a hammer that I mentioned, right? So a hammer, okay, let me just go back to a hammer. So how do I remember? As I say, you don't want to remember all the names because there's just too many. You want to understand the concept behind each candlestick bar. But how I remember this hammer right over here, right over here, this hammer, is that I look at it like a hammer, right? So you look at this bar right here, you can see there's a long lower shadow, all right? And you can kind of like grab the long lower shadow like a hammer, and you can like just take it and whack somebody, right? So that is like a hammer. So that's how I remember I call it a hammer. Inverse hammer would be what we call a shooting star, but that would be for another video. That one's more bearish. But in this case, we're talking about bullish. That's like a hammer. Hammer is one whereby you got a long lower shadow. You can hold the shadow, the stick, and you can whack. So that's like a hammer. So that's how I remember this name. Okay. So we can see like a hammer over here in this zone. That would be great. All right, that's where we could potentially, time our entry to get in this zone, because that's where a rebound might actually happen, especially if it pushes above the high of that hammer day. That's where the rebound might happen, like what we see over here. All right, so that's where the first zone, kind of like the area of value whereby you want to spot this bullish, all right, patterns, right? And let's take a look and see if there are any other zones. So same thing here, we can like push higher. All right, so each time you push higher, you can see this was pretty much that resistance level. All right, so I'll just share with you guys a little bit. This is like a resistance level whereby you can see we touch, and finally we broke out of this resistance. So that's kind of like a breakout. All right, I'm not talk too much about it. It's like for another video, but a breakout just means that it has been touching that resistance for a couple of times, but finally we break the resistance and it starts to push higher, and the uptrend actually continues to a next higher phase, right? So that's kind of like a breakout, right? So when it breaks out, that's great. You can push higher, but we might see a pullback as well. All right, that's where you can think about getting in again as it pulls back. All right, you can see. So in this case, we break out, we go up, and we went to like about 15 cents. Okay, look at this right over here, right? So in this case, you can see that now, okay, this is a bit of a sidetrack, right? So we're talking about bullish candle, right? But in this case, we got this, what we call like a doji. Remember that little cross that I talked about? We see it at that area of value, all right, near a support level. That's a good thing. Same thing, if you see it, after price and push up, and you see it at what we call a resistance level or psychological resistance. In this case, that would be a 0.15 level. I think the 15 cents level would be a psychological resistance level. If you see it right there, it could also signify a reversal. As I mentioned, it's kind of like signify indecision between buyers and sellers. It could be at the top, it could be at the bottom, but essentially what it means that there could be a potential reversal happening, right? Especially if you see it near a resistance for it to come down or a support for it to U-turn back up. Does it make sense? All right, so that is a doji, right? Okay, so let's see if you can find like a bullish bar, or maybe where you want to find that bullish candlestick bar that I talk about, right? So first thing first, right? So we kind of like push out, I say might retrace back down. It's still in an uptrend, but uptrend doesn't mean go up every single day, right? It can also go up to a certain level, like the 15 cent, it pull back, it comes back down, and we find a new higher support, all right? And it finds a new higher support, and that's where that support will be another new zone whereby you can time your entry, especially if you see that hammer, that bullish candlestick bar or pattern that we talk about, right? So let me just go ahead to shift this thing, that area of value right here. Let's just shift it up here. That could be an area of value if it did pull back, but it did not, never mind. So we can shift it right here. So that would be the new area of value, all right, at this higher consolidation phase from like maybe 0.13 all the way to 0.15. So we see like a hammer, all right, a kind of like a bullish and going, some of those bullish candlestick bar, maybe even that doji that I talk about right here. I think, look at this right here. So I think we saw a couple of like dojis right here, all right? Right here you can see that it just shows a bit of indecision, it consolidates, started to push up, right? So same thing, right? If we see those bullish candlestick bar like a hammer over here, that could be a sign of strength whereby we might start to see the rebound back up all the way back to that same resistance level, that 0.150 level. All right, so that is where you want to look out for a bullish candlestick bar, right? Not just like anywhere at the top or in the middle of nowhere, right? You want to try to look for it at what we call the areas of value, and in an uptrend, that areas of value will be what we call near that critical support level. Okay guys, so very quick video, all right, and I hope you have learned something from this video pretty much on how you can spot or use bullish candlestick patterns or bullish candlestick bars to profit in the stock market. So we pretty much just draw it on the diagram like what you see over here. We have covered a few different bars, like one that's opening low, closing high, one with a long lower shadow, one that's no vertical shadow. So I hope you kind of get an understanding of what are some of the bars to look for, all right? But the key here is to understand the concept behind that bar rather than remember all the 5 or 10 or 20 names, all right? And after understanding the concept behind the bar, the key here is where do you want to spot those bullish candlestick bars, especially in an uptrend, all right, to time your entry. I hope that makes sense. I hope that kind of like, adds a bit of value to your trading, all right? And that's pretty much what we have covered, right? So guys, if you found this video useful, I would appreciate if you can give me a thumbs up. That would definitely help out the channel, and thank you so much. And of course, what you want to do is to smash the subscribe button as well. That would be really helpful. That would really help out the YouTube channel, and thank you so much for doing this, right? So you want to find out a little bit more on how you can get some of our ideas. We do share some of those Singapore trade ideas by WhatsApp to clients of mine in Philip Securities. We do have some videos where you get much faster as well as a client, all right? That's where you're going to find out more. Go ahead, click on the link around this video. I'll probably put the link below this video. Click on it, find out how you can become a client of mine in Philip Securities to get some of my ideas, right? Singapore trade ideas much faster by WhatsApp at no additional cost whatsoever, right? It's pretty much the same as whatever you are paying whenever you are trading. It doesn't matter where you're trading, all right? It's pretty much the same, but pretty much ask yourself, what is your current broker doing, or does he even exist in the first place, all right? So if not, click on the link below, come aboard as a client of mine in Philip Securities, and I can't wait to speak with you. Thank you so much for watching. Take care.